Good morning. Welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me for the monthly energy update is Bob Yawger. He's a senior energy analyst over at Mizuho Americas. Thank you very much for joining me at MarketSite today. And we've got a lot to cover. A lot has changed since we spoke back in March between crude oil and energy stocks. Let's kind of review what's happened over the past 4 weeks.
Well, the big story, of course, was the Syrian chemical situation. That bid the market about 7% last week. Expectations that the United States would have some kind of military comeback and a potential for a conflict of some type with either the Iranians or the Russians. That came and went this weekend. It was more, in my opinion, it was the smallest possible scenario. It caused the least amount of potential conflict in Syria. So you're seeing the corresponding pullback a little bit today in the crude oil futures market. We had traded to a 4-year high last week, and now we are pulling back a little bit. But there's still plenty on the horizon to keep things interesting in the energy sector. So you have the Iranian nuclear deal comes up for review by President Trump. He has to make a decision on that by May 12th. I suspect that that will put a good bid in the market between now and the next basically 4 weeks. And there'll be plenty of headlines to support the market between now and then. So that should be an interesting development. Obviously, that ties in with Syria, too, because Iran is an active participant in Syria also. Other things you may have on the horizon, you have Venezuela, which is increasingly falling apart. Barrels go off the market every day in Venezuela because they just don't have the capital investment to refurbish their refineries and get them up to speed. So that helps OPEC take barrels off the market. That bids the market also. And then another really big issue here as of late is the refineries here in the United States have been running at 93% of capacity. For this time of year, that's the largest for this time of year ever. So generally speaking, people don't drive at this time of year, certainly not the degree they do in summertime. And you don't have to heat your house as much as you do in wintertime. We're in what's called a shoulder period here, but we're ripping this shoulder period. So we have our refineries running at really hot levels. The refineries are pushing through 17 million barrels of crude oil for this time of year. That's unprecedented. So that's a big number, big demand for crude oil, a lot of gasoline, the heating oil coming out the refineries, and they're being used. So there is demand for it also.
Right, and we haven't heard that in a number of years where the demand side is actually meeting the supply side, but there is a risk to that as well. You can only run at 93% for so long.
Yes, it's true. We are running at the highest level ever for this time of year. At some point, you can only run a refinery at 1,000 degrees for so many months in a row until something melts down, breaks, or snaps. You generally slow it down at this point and systematically refurbish pieces in the refinery and then ramp it back up again in time for gasoline season, which starts Memorial Day weekend. But we're going to be at high levels going into Memorial Day weekend already, so it is a dangerous dance here. Refiners are doing great. Marathon Petroleum has been hitting all-time highs as of late. Valero has been hitting all-time highs as of late. Two good refiner names that are in S&P 500. And you may continue to see that, but like I said, you have to watch out. There is physics involved, and you just can't burn everything as hard as possible.
So what happens if one of these refiners come offline for unplanned maintenance? What would happen to the overall crude market?
Generally speaking, gasoline and heating oil will get bid. Crude oil, because you don't need as much of it, because you just shut down the refinery that's using it, tends to trade lower. That's the theoretically exactly what should happen. Very often, everything rallies together, though, until somebody finally says, hey, they're not using as much crude oil as we usually do. Why is the crude oil going higher? Then it kind of starts to settle in. The headline always bids the market, though.
Right.
If you have some kind of, okay, we shut down this big refinery in Texas, one of the bigger ones, and the market will initially rally. That said and done, when you have to make more gasoline because one just closed, you'll compensate someplace else by jamming as much crude oil into that refinery to compensate. So you will get the crude oil use eventually, though there will be a small hiccup. All
right, and to wrap up, outside of Syria, outside of Iran, outside of the fact they're running at 93%, do you think this $65 to $70 area is appropriate for crude?
I do. I think that, especially with the refinery utilization rate running the way it is. I mean, if you could take the politics, the geopolitics out of this story, you still have a strong demand story. It's not all supply side anymore. There is a demand story here also. That comes out every week in EIA weekly storage report. And this is going to be a big one this week.
All right. Well, I'm sure a meeting in May is going to be super interesting.
Yes, very.
All right. Well, thank you very much for joining me at MarketSite. Thank you for joining me today. I'm Jill Malandrino, global markets reporter at Nasdaq.